Hey guys, GammaEdge here coming at you with a quick market recap for August 6th, 2025. It's a great day for us in terms of the key transition levels. Our upside target really hitting as we described in the pre-market plan. If you don't know what the pre-market plan was, go on our YouTube page. We did a YouTube live basically every single morning, walking through that. But right, just quickly getting into it. So we have our DEX transition zone here, the junk and tether range above and below that, and then upside target was 63.50. All this was based off of the option structure analysis we did, again, as I just mentioned, in the pre-market. Worked out to a T. So now we're going to dive into that pre-market prep just quickly on the 0DT structure. Then we're going to be looking at our intraday tools on how that helped us navigate not only the impulse move higher, but then this consolidation basically being stuck right at 63.50. Right, so getting into it, this is our pre-market dashboard for SPX 0DT. A couple things to highlight. First, we have our DEX transition zone, which is the blue box. That was 63.30, 63.10. DEX transition zone is very key just in terms of that is where the transition is occurring within the options market structure. So within this zone, we see a lot of choppy price action. Generally, we're not looking to do anything in here just because it's inherently a lot of brownie motion happening. From there, next we look at our junk and tether range. This is 63.40 down to 6,300. And again, this is similar to the DEX transition, but price more meanders within this range. If you've been following us, the last couple of weeks, you've seen really price interact with this level on just about every single day. And so again, these effectively act as good goalposts, both to the upside and to the downside. By goalpost, I mean, once we approach, as an example, up to 63.40, what we need to see is significant intraday volume to help us propel us through that strike. The reason being is just been looking at the distribution of speculation within the structure, or in layman's terms, how people are placing their bets. Generally, the top and the bottom of the junk and tether range are where we see kind of significant positioning. And so because of that, you have the negative charm components at those levels. So we need to see a lot of volume come in to help us overcome those dynamics. And so, right, our kind of if then was above 63.30, looking to 63.40, above 63.40, looking ultimately to 63.50, which was kind of the first key kind of upside profit taking level. Right, and not only that is it, it's plus GEX level, right? The strike with the most call gamma. It's also the COTMC level, which is again another key monetization level. That's where the in the money and out of the money calls are starting to equalize at that level. So there's a propensity to monetize at that level, right? Because once your call option goes from out of the money to in the money, especially on a 0DT basis, you've captured a significant amount of gain on that contract from where you put it on. Said another way, you've captured all that out of the money risk. So that contract to convexity is now going to start moving more on a linear basis. And so, right, for that reason, all those factors were why 63.15. Right, in hindsight, it's easy to say that that was the key level because that's where price interacted throughout a lot of the session. But we had that documented in our pre-market prep. Just to show you that real quick, right? Pretty extensive SPX game plan. Then we go through kind of our if-then levels again, 63.50. Key level right there, we have our different transition zones and what we expect to happen within that. But, getting back to the price chart just real quick, again, we have those two key transition zones outlined within the box, and then 63.50 overhead as kind of that first top side. Something I want to note real quick, you can see here just a couple of executions that I took on the day. Reason I do that is one, to show that we're not just providing this information and going in a hole until the next day, right? Like we're in the community, we're trading this live with everybody. So we have skin in the game. Second reason is this was executed through futures. And so a lot of people, common objection is, oh, I trade futures, right? I can't use the data. Well, that's not true because I'm using the SPX levels, overlaying that and simply just executing through the futures contract itself. So I'm just showing this again as an example, just to kind of show you how this data is adaptable based off of your trading strategy, your preferred trading instrument. Lastly, what we always do here is we hit on our intraday volume analysis, which is a critical component of our 0DT methodology. Reason for that is because, yes, understanding structure before pre-market is great, but once the bell rings, folks are transacting, right? And understanding that is equally as important. And so with that, what this chart shows is this is specific to SPX 0DT volume, and we are plotting centroids throughout the session. And what that is on a 5-minute basis, we are aggregating that volume, overlaying the distribution, finding the middle point of that distribution, which we call centroid, and we plot that. So calls on top, and we have puts below. The reason that is effective is two reasons. A, from the open until any point throughout the session, you can understand what the character of price action is, whether it be chopping or trending. Second is by understanding where price has been and where transactions have transacted and where those centroids are moving, all else equal, we can understand where those centroids are likely to go throughout the remainder of the session. And so, as you can imagine, that'd be very informative for any kind of strategy that you have, whether that be, placing butterflies for a specific strike at the end of the day to pin, or, you're looking to sell premium above and below those levels, or you're looking for trades on a directional basis. And so, right, something to note, today's price action, we saw a pretty aggressive downward move where we held the bottom of our DEX transition zone. Again, just showing that for you here. The bottom of our drunken sailor range, 6,300, also a key kind of psychological level, right? Basically held to the penny. And then from there, what we saw is an aggressive move higher in call speculation, which is exactly what you want to see when we're getting this move higher. You're seeing call speculation support that, right? Because as we see later in the day, that call speculation really dried up, really stopped. And so that's going to put a lid on the market as opposed to this action right here. Keep that in mind, no lid on the market. It continued to expand ahead of price action itself. And then again, why this tool is so invaluable, we could see once that speculation stopped progressing higher, started to see a divergence with price, and then put that lid on the market throughout the rest of the session. And again, that lid came when price got up to that key 63.50 level that we talked about as a key upside target for us. And so, the tail of two markets, the reason I took the trade in here was because we were breaking through our transition zones, and we also had this signature right here of call speculation moving higher. And then throughout the session here, that's when other folks jumped in and within the community that like to kind of sell, premium above and below, put butterflies on, all that good stuff. That's why this tool is so invaluable. Lastly, what I want to show you too here is, the stuff we do is not just applicable at SPX 0DT. As an example, here we have Apple. We're looking specifically at the 5-minute chart. Here we can see, a lot of interaction in the pre-market with its P-trans level. That's just a key kind of upside breakout level for us at 205. And then ripped all day right up to plus gex at 215, where, the key upside level, just like 63.50 was in 0DT. You can think of the 215, which is plus gex, as, that most convex strike plus most call gammas. We see that all the time, really did not break above that level. Another one we can take a look at is, give me a second here. Looking at Tesla. Let me get my pin out. So kind of key interaction here with our key breakout levels to the upside in the pre-market, then ripped right up to plus gex 315, good first profit taking level. Yes, it did resume higher again because people are still allowed to buy the stock even if it's up to plus gex. But plus gex is just kind of that key first profit taking level that we always look for. So again, here's just two examples of these levels paying dividends as well on an intraday basis. Last thing for you guys too is, this is your first time stumbling on us, maybe you watched this a few times, don't totally understand what we do quite yet, go to GammaEdge.us. Here we have a blog, we have free courses, we have newsletters. If you look at our free course, GammaEdge Fast Pass, this is something that we've just launched within the last month. It's basically everything that the paid members get in terms of how we do what we do, our entire methodology, how to use the tools. There's probably 20 different bite-sized articles. Each article gives you a key takeaway that you can implement tomorrow if you wanted to. So I just wanted to call that to your attention, just so you kind of understand the resources if you want to get more up to speed, more familiar with what it is that we do. So with that, I appreciate the time tonight. We will talk to you later. Thank you. Bye.